Welcome to the Legally Ever After Real Estate Podcast, where we help you build, protect, and pass on your assets. I'm your host, estate planning attorney Pamela Moss-Garrett. Let's get started. All right. Today we have Holly Gallegos. She is the Senior Vice President at First Bank, and we're going to be talking about finding money for real estate investments. Welcome, Holly.
Thank you. I'm so excited to be here.
Thanks so much for being here, Holly. Okay, so what are some ways that real estate investors can find money to invest in real estate?
Yeah, there's a lot of tips and tricks for that. So the first thing that I would say is a lot of investors get started by taking equity out of their primary residence. So whether that be a cash out refinance or a home equity line of credit, properties have appreciated so much over the past few years, and sometimes people don't even realize how much equity they have in their property. So a lot of people will get started that way and buy one investment property, and then they'll do the same thing. They'll wait for that property to appreciate and then tap into that equity so that they continue to build their portfolio. One thing that a lot of people don't know is that you can actually get a home equity line of credit on an investment property, which not a lot of lenders do, but we can. And that's important because right now, as the interest rates are increasing, you may have a pretty good rate on your investment property and you may not want to have to do a cash out refinance. So to be able to do a home equity line of credit just gives you a little bit more flexibility there.
I love that tip, and knowing that those home equity line of credits can extend into your investment portfolio so that you can really take advantage of the interest rate that you already had. And, in addition to, using your existing equity in your properties, what are some other ways that people can find money for real estate investments?
Yeah, so one thing that I wanted to talk about is 1031 exchanges, which not a lot of people know how to do these properly. But if you have an investment portfolio and you're looking at potentially exchanging into another type of investment, you can utilize the 1031 exchange, and then you don't have to pay taxes on what would be your capital gains for those properties that you are selling. And one thing that a lot of people don't know is you don't always have to do the same type of real estate. So if you're selling a 1 to 4 family property, you don't necessarily have to go buy another 1 to 4 family property. You could sell several 1 to 4 families and 1031 into an apartment building, for example. Or you could sell an apartment building and put that money into an office condo. Or something like that, as long as you are not living in the property or doing any work on the property yourself, so that there's no conflict of interest between your investment and yourself, then you won't trip those having to pay the IRS taxes.
Oh, that's a great tax savings tip. What other tips do you have?
Well, to follow up, one other thing on that is there is a traditional 1031 exchange, which is where you would sell your property first, and then those funds would get held in the 1031, and you would put that into another replacement property. You have to identify that property within 45 days that you're going to buy, and then close within 180. So those are kind of the important timelines. But another thing I wanted to talk about is a reverse 1031, because this is a little less common. And what that allows you to do is actually purchase the property that you're going to be exchanging into before you sell your existing property. And the way that you do that effectively is the bank gives you a bridge loan, is what it's called, on the property that you're purchasing. It's just a temporary interest only loan that allows you to buy that property and then pay that bridge loan off once you sell your existing real estate. So sometimes, you identify a property you want, but you just have to close so quickly in order to be able to get it. So just wanted to mention that.
That's a great tip. What's your next tip, Holly?
Another tip that I would have would be regarding fix and flips. A lot of people have been getting into fix and flips lately, just because there are some great pockets of Colorado that have opportunities for that. And again, a lot of fix and flippers start with their primary residence. They put a home equity line of credit against their primary, and then they come to us and say, can you do an acquisition loan, just an interest only, maybe 6 or 12 month loan on the property that I want to buy. And then I will go ahead and finance the improvements on the property through my home equity line of credit. And the nice thing about doing it that way on a home equity line is you only pay interest on what you have drawn every month out of that. And so, if it takes you a little while to get through permitting or that kind of thing, or get your plans drawn up, you're not paying unnecessary, interest. So what a lot of people will do is they'll draw up their home equity line, they'll do the improvements they need to do, give themselves some time to market the property. And then once the property sells, they pay that home equity line of credit down, and then they flow right into the next property. So yeah, that's a great way that people can build up their fix and flip business, especially if they're just starting to get into it.
That's super helpful. And so for people who aren't quite doing full fix and flips that maybe want to do other types of construction, whether it be commercial or residential, is there resources or tips that you have for them?
Yeah, definitely. So one way that I would say is a good thing to do right now would be what's called a home equity installment loan. And you can do an installment loan on commercial or residential real estate, but you can do it in second lien position so that you don't touch your first. Again, especially if you have a great interest rate on your first. And a home equity installment loan is just like it sounds. You can just take out the amount of money that you need and then pay it back over an amortization a certain amount of time. So every single month, this is what my payment's going to be on that. So it's just another way to tap into your property equity and do it that way. If you're looking at a little bit larger project, we do also do a lot of construction lending, especially lately because the housing inventory is down. And so a lot of people are wanting to do construction. And you can do that on your primary residence, or if you're looking to fix and flip a property, we can always finance construction improvements. So that's kind of a unique product.
That's super helpful. What about kind of using your self-directed IRA to invest in real estate? Do you have any specific tips around that?
I do. That's a great question because that's a very specific way to use your retirement. So effectively, if you have a retirement plan, sometimes you can do it in a 401k, but a lot of 401ks don't allow you to. So normally it would be something where, maybe you're self-employed and you have a traditional type of IRA. There are some intermediaries out there where you can actually self-direct your IRA to purchase real estate. We work with a lot of the big ones across the state. Intrust or New Direction are a couple that come to mind that are local Colorado companies. And so effectively, you say, I have $200,000 in my IRA. I want to direct $100,000 of that towards purchasing real estate, for example. And then what you can use that for is you can use that for down payment money. You can use it for closing costs. And you can also use it for reserves, just in case, you buy an investment property and for whatever reason you can't get it rented for a couple of months. You obviously want to have some reserves available. We at First Bank can do self-directed IRA loans, which is a product that almost no other banks can do. But we will actually lend to your self-directed IRA for the remainder of the funds that you need to purchase that property. We typically ask for 35% down, so it's a little bit more than kind of a traditional amount down. And that's because you cannot personally sign on that loan since your IRA is purchasing it, and there can't be that conflict there. But we'll go ahead and do a portfolio, so a 5 or 7 year arm for you, and go ahead and get you into that property. And then effectively the self-directed IRA company that you go with, they are actually making the monthly mortgage payment on your behalf out of those funds that you have directed to them. So that's a really unique way to tap in.
That is really unique. For investors that have kind of more than 10 properties or like larger portfolios, do you have any kind of specific advice for them?
I do, yeah. So as most investors that have over 10 properties probably know, once you hit that threshold, you can't go Fannie Freddie anymore. So you're not going to be able to get a typical 30-year fixed mortgage on that property. We have portfolio lending here. So we underwrite it ourselves in-house in Lakewood. And that allows you to go over 10 properties with us or just in general. And again, that's going to be a portfolio loan held on our books. So a 5 or 7 year ARM most likely is going to be your option for that, but it allows you to continue to build up your real estate portfolio.
That's a really unique offering. And kind of for people who are looking at or haven't worked with a regional bank versus a national bank, what would you kind of describe are the differences for someone working with a regional bank like First Bank versus some of the larger national?
Yeah, definitely. Well, First Bank is really unique because we are actually all employee owned. So we're privately held. And it allows us to just make local decisions. Our headquarters is in Lakewood. And so it allows me, when I'm working with a client to just pick up the phone and call my underwriter and work hand in hand with them to especially work through more complex financials. We have a lot of clients that own many, many different businesses and they have a very complex underwriting spread. And so sometimes you just need that local ability. I would also say because we're, employee owned and we have portfolio lending, we're able to do what I would call more of a common sense underwrite. So we can kind of look at, your global net worth, cash flow, repayment history, all of those types of things, and just be a little bit more flexible when we're considering income and property types than you would see with national banks that have just kind of a very rigid way of underwriting.
That's really helpful. And I know I just switched all my banking to you, and it was a really great, smooth process. And I think I was going from a national bank that, really didn't, I feel like, have the local business owner in mind and really didn't have that relationship. And just kind of making the move, I noticed how much quicker it was and how much smoother it was. And I feel like these innovative resources that you have described, even just on the time so far that we've been on, they're just not available at a national level. And you don't have that relationship to really build on and really take advantage of some of these creative programs. So I'm super grateful for you and your team. We've been talking a lot about residential. What are some of your thoughts on folks that are investing in commercial?
Yeah, definitely. So a lot of the products that we've already talked about, as far as fix and flips, self-directed IRAs, 1031 exchange, all of that can be done on commercial real estate. So I'm really glad that you brought that up. We see a lot of people that do 1031 exchanges out of one type of commercial real estate into another. One other thing that I wanted to bring up about commercial is that we are seeing a lot of owner occupants right now that want to buy commercial real estate for their business specifically. And mainly this is just so that they can customize the space to them, and they may not be able to do that when they're leasing somebody else's space. I think, rental rates have also started to go up pretty heavily. And so a lot of people are wanting to get their business into their own space and even maybe rent out a portion of that space and say, my business is going to occupy half of it and I'm going to rent out the other half and make a little bit of income on that. Another thing that people will do is kind of employ the same tactics where they'll move their business into maybe, say, an office condo, for example, and be there for several years. And then they'll take some equity out of that property as it appreciates to go buy a larger property for their business, but they'll continue to rent out that smaller space. And so they just continue to build on their real estate portfolio on the commercial side that way.
Do you I feel like right now, there's a lot of talk in the industry about interest rates and kind of our real estate market right now, both residential and commercial. Kind of what's your take on the trends that we're going to see over this next quarter and this next year?
Definitely. I think it was kind of shocking to the market just how quickly rates went up. So I totally can appreciate where people are coming from with that. I think the biggest thing to keep in mind, well, two things really. One, when you look historically, back over time. Really, these rates are not unprecedented. We have had times in the past where rates have been much higher than they are today. The other thing I think people should keep in mind is that it's really all about payment. What it comes down to is, what are you paying in rent versus what you'll be paying on your mortgage? And does it make sense to still move forward with purchasing that property? Sometimes it doesn't, but for other people, I think as long as they can afford that monthly payment, even if you want to do maybe a 5 or 7 year arm and see if the rates come down a little bit by the time that you get to the end of that period, I don't think that that's a bad way to go at all. The next quarter will be interesting because certainly, the Fed has committed to continue to increase rates to try to curb inflation. So I think that we will see some more increase, especially on short-term rates. But eventually, things will normalize. They always do.
Are there any common mistakes that you see when it comes to, finding money for real estate investments?
Yeah, that's a good question. One thing that I've been seeing a lot lately is people will try to do one LLC for multiple properties, which is not a terrible thing, but my advice has always been that it's better to set up an LLC for each property that you own. It just, it helps on our side with the underwriting, being able to see each property in its own individual tax return, or if it's a single member LLC, it'll be on your personal tax return. But obviously from a liability standpoint too, and I'd be curious on your thoughts on this, but I think, because that's your lane, but I just think that it's strategically probably the best way to go.
Yeah, I completely agree, Holly. I think from a liability protection standpoint and an asset protection standpoint, that separation, you're segregating assets. So that's always going to provide you more protection. And it's great to know that there's some additional benefit when it comes to taking out, different types of loans and different types of products, that it just makes the underwriting process smoother. It makes everything with your office smoother. That's helpful to know. Any other common mistakes or tips that you have?
Yeah, one other thing that I've been hearing a lot lately is people will say, buy your asset just yourself and then switch it over, into an LLC or a trust, which again is not a terrible way to go, but there are two kind of issues with that. One is that in our loan paperwork, it typically says that you can't transfer title of the property. And so then once you do that, the lender might say, well, we want to make sure that this trust is solely controlled by you, or this LLC, you're the main owner and it's not an LLC with completely different owners than who are our signers on the loan. The other thing, and I think this is just human nature, is if you close just under yourself, you might have the best intentions of putting it under an LLC or a trust, but maybe you won't, once you've closed and that process has already been completed. So we can absolutely lend under trusts and underneath LLCs, because we have those portfolio loans, and we can just look at all the paperwork up front to say, yes, this trust is going to be totally fine for our lending. This LLC is going to be completely fine, just so that you know up front and there's no guessing after the fact.
That's super helpful, because I think that's something I'm always telling my clients to look into, because, a lot of people will get properties in their name because, a lot of banks, if you put it in an LLC, are going to consider a commercial loan, and they won't do any Fannie Freddie lending. And then they convert it into their LLC, which could accelerate the due on sale clause. And so I'm always talking to them about having that conversation with the entity. In practice, most of the time it isn't accelerated, but the risk there is there. And so you want to work with a banker and an institution that you really have that trust and that relationship with, and you understand. So that's super helpful. Any other tips or advice that you have for investors?
I think that's really the only things I can think of right now, unless you can think of any other questions.
No, that sounds great. We went through a lot of information. Can you tell everyone a little bit more about kind of you and what you specifically do, and then how people, if they're interested in getting in touch with you, can get in touch with you?
Yeah, definitely. So I am a senior vice president at First Bank. I have been here for almost 10 and a half years now, which is a little bit crazy to think. Mainly what I do on the origination side is commercial real estate lending, but I also run our residential team and I have eight just great, amazing lenders underneath me that do the whole residential side. So I think one thing that is unique about us is that we can help you with everything from a HELOC all the way to an apartment building or a development loan. So it's kind of a one-stop shop. As far as getting in touch with me, obviously email is a good way to get in touch with me. So I'm at holly.gallegos@efirstbank.com. Or you can reach me by my phone, 303-347-5950.
Thanks. And I will definitely include that in the show notes. So the final question I have for you, Holly, that I ask everybody is, what is your legacy?
Yeah, so I think my legacy really is just trying to give people financial advice. You know, my family really struggled when I was little. And so it's something that I'm passionate about. Just that financial literacy and education piece really speaks to me. So I would say that's what I would want my legacy to be.
I love that. Well, thanks so much for being on, Holly.
Thank you for having me.
If you need an updated will, trust, or estate plan, and you are a Colorado resident, we would love to be your estate planning law firm. Give us a call at 720-706-0036 to schedule your complimentary 15-minute call. You can also directly schedule at lawmother.com/go. If you liked this episode and you want to learn more, you should definitely check out my international best-selling book, Legally Ever After. It's available on Amazon as both an ebook, a paperback, and an audio version. And if you'd like a free chapter, head over to lawmother.com/LEA.